You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it is time to rock out with the option block. Everyone's favorite. I hope it's your favorite. It's certainly my favorite. Hopefully it's yours as well. Bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of snow here in the Chicagoland area, all adding to the wintry mix. That is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, the Options Insider Radio Network. Coming at you here. Well, trying to get the live going again. We've changed new setup here in the studio. I'm not sure if the live is working, so I'll have to go work with the producers to get that going while we get the rest of the show rolling. So let's just introduce the rest of the crew while I do some behind-the-scenes skullduggery. Let's start off going out to the hinterlands, where we are joined once again by the rockingest of lobsters, Mr. Andrew G. from OptionPit.com by way of Carmen Lion Capital. Mr. G, welcome back to the program, sir.
It is lovely to be here. Lovely, lovely, lovely. And oh my gosh, we have snow too. It actually literally just stopped. It's been snowing, but it just stopped.
Just stopped? Just stopped. Well, I didn't think it ever stopped in Maine. And then also joining us from the other, quieter, not quite hinterlands, but close, St. Charles, where we are joined by the man himself, Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, welcome back to the program, to you as well.
Always great to be here. Always great to be here.
All right, with the gang assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show we break down what the heck is trading out there. It's a bit of a weird day. Usually I like to go first, but I'm going to mix it up. I'm going to let my cohorts go first while I try to suss out what's going on with the live stream here. So let's start the opposite of the way we went. Let's start with Uncle Mike. Uncle Mike, sir, what is catching your eye in today's market activity, sir?
Never before in the history of the entire stock market has there ever been a better time to sell than today. Now, I'm of the opinion that there will be better times to sell in the future. However, the bold fact of the day is that we are at new all-time highs. So it's an exciting day, to say the least. I think with everything that we have going on right now at the macro level, impeachment was never really, the market really didn't seem to care about that much to begin with, but it looks like they care even less now because Trump got acquitted on everything. We still have the beer virus that's out there, and there's still a lot of deaths in China, and I'm still not convinced that that's totally not going to be a thing, but at least for now, that appears to be under control with what a lot of people seem to solve most of life's problems at a macro government level, and that's just throw money at it, which is what China pretty much did in terms of trying to provide economic relief to economies for the lost business of what's occurring with the beer virus. The beer virus, of course, being the coronavirus. And also, haven't really heard a lot in the news for what's going on in the Middle East. At least it's been somewhat quiet over the course of the last few days. So at a macro level, it seems right now the biggest story is Nancy Pelosi ripping up Trump's speech. So we have a lot. We have a lot of things to where we can actually start looking at businesses and how earnings have been and how businesses are actually functioning, which is always exciting when we are looking and being market participants and market students. Some things that I'm noticing right now is the main thing that I'm noticing is that we're still hovering around the 15 level in the VIX, even though we're at all-time highs. So from a strategy standpoint, it gives me personally kind of a unique conundrum in that it's also not the type of market where we have a 20 VIX to where, I can sell a put spread way out of the money, and then so long as we don't go down really far, I can get away with that. So now one thing that I'm noticing is because we are kind of at not the higher end of the spectrum, but we're definitely not at what I would say super low volatility, my humble opinion, of course, is that I have to kind of mix things up a little bit in terms of buying some spreads, selling some spreads, and actually acting like an option trader. So yes, it is more work, but I got to admit it's kind of fun. So that's what's going on in my world personally, in the trading side of it. In terms of where we are at in the S&P, we are at new all-time highs, like I had mentioned. The next big barrier will be the 3,400 mark, or the next big number, I should say. It may or may not be a barrier. And what's happening now is the S&P is going to work at kind of an exponential excitement, in my opinion. Meaning, and I've talked about this before, 15, 20 years ago, a 10-point move in the S&P was a huge deal. But now, a 10 to 15-point move in the S&P is no big deal. So if you're trading derivatives right now, what can be really exciting about the S&P is that a 1% move is going to be 33 points as opposed to 3. So a lot of excitement going on in this marketplace, and that's what's going on in the world of Uncle Mike.
Thank you for that. Certainly break down what's going on here in the rest of the market before we get to the rock lobster. Like Uncle Mike alluded to, we're hitting some new levels, some new highs on the upside there. I guess the beer virus, as Uncle Mike called it, I like that. The beer virus fears have mitigated at least somewhat, at least from a market perspective. Of course, the impeachment is now behind us. Both counts have been effectively acquitted, so no removal of the sitting president there. So the market probably liking that uncertainty. Never its friends. All that a combo for seeing the markets rallying. We're seeing the S&P, once again, the Goldilocks up about 0.4%. The Dow up about 0.3%. And the NASDAQ up about 0.6%. And our old friend VIX Cash coming into showtime was at about 15 even. That puts it down over 2 points, about two and 2/3 or so points from where it was this time last year. It's come down a little bit more since it's down about a 1480 right about now. Our old friend VVIX, volatility coming in a little bit down to about 91, a little bit north of that, 91.3 or so. Puts it down about 10 handles from where it was this time last year. And our old friend VXX continues to move back to the downside after having the temerity, the indecency to move to the upside. How dare it? Getting up almost to the 16 handle. Now back down to right about 14.1. That puts it off about 1.6 handles from where it was this time last show. All right, Mr. Rock Lobster, sir, what is going on in the land of the crazies, a.k.a. the pit chat these days?
We're looking at a couple of things. What is going on? I just watching the rally, the incredulous rally, to be honest. Like this virus is like consuming but a large part of China, and the market just doesn't care. I don't know if they're pumping tons of liquidity in. Ever since Monday, I think FXI, it's just the ETF straight up. It's been up, at least it's up a couple of bucks on the lows, which percentage-wise is pretty big. So, I just throw my hands up. I don't know. I mean, I have like my standard, like our our trading club, vol trading club positions on, and everything is now starting to kick into the short vol side. So, and I'm watching it and say, oh, should I take some profits on it or should I just wait? So right now I'm just waiting. I'm just leaning on the fact that I own some upside vol, and maybe this is all just a whole big, somebody waves their magic wand and vol is 13 again. So that's all I can think. So right now we've had such a hard rally. It's hard. It's going to take a while for VIX to actually drop. Just because the volatility works both ways, up and down. And as of right now, this is the first day we've had. That's what I would call a tepid move, at least as of right now. Boeing is starting to rip higher because of maybe it all just goes away. Maybe the virus is just a problem for like the middle of China, and they just coordinate, seal the whole area off, and then just throw a bunch of doctors in there and try their best to fix it. But as far as like the U.S., I don't think we're really flying in there or flying people out. So I think the globe has kind of just basically just shut down flights to China from what I can see. So, all I'm doing is I'm looking at SPX go up, but I'm not. And I understand why VIX is not going down. That's just pure math at this point because the rallies have been so severe. Usually when they're that severe, we expect to pull back and the vol doesn't go down. So I would say we need to sit at this level and kind of tread water for a couple days. And that's what we're looking at. Names of note, Boeing up $11. This is the highest it's been in quite a while. Actually, it's at like 340-ish. Mark has a little trade going in a sharp bets that he's still writing. And stocks I'm looking at is like Gilead might have, I can never say it right. I think it's GILD. It's Gilead or Gilead. I can never get it figured out.
I've always called it Gilead, but tomato, sir.
I always do that. I know it's about some, Old Testament, whatever. I can't ever. Anyway, like crazy vol, nutty markets, like they might have a treatment for this. Again, all I'm seeing is higher vol, the stock's higher. It could all be total crap, but it's a holding of mine too, full disclosure, so I don't mind this. I'm almost, I could be back to even on it maybe after today. So those are just looking at those things, and, the stocks are going up. So I don't really, I'm trying not to think too much about it and just trade the position I have, and that's what I have. So it's another good day to be long. That's all I can say. I'm just very surprised, but I didn't get in the way of it either, so I feel good.
Are you playing the Uncle Mike role on the show today? Are you playing the diehard bull on the show today? Good day to be long, says the Rockluster.
Just buy it all. What the heck?
Just buy it all. Just go the Uncle Mike route. Never saw some long equity or just long premium. You didn't gobble it all up. Let's see what the market is gobbling up today. Coming into the show, it's actually as of a few minutes ago, we're seeing decent paper on most of the major indices. VIX at about 388,000 contracts. The ADV is closing in on 500K now, so it's been robust. A lot of that due to our friend 50 Cent out there continuing to keep the volume numbers alive, dropping 100K at a clip pretty much out there. So the VIX has him to thank for a lot of that boost of ADV. SPY closing in on about 1.5 million. The ADV about 3.2. The S at about 664,000 contracts. The ADV about 1.4 million. The Qs about 423,000 contracts. The ADV 804. So getting up there a little bit on the Qs. And the Russell, aka IWM, at 319. The ADV 372. So a pretty active day for the small caps. If you want to talk more Russell, stay tuned for TWIFO coming up after the show. So you'll hear a little bit more of that fun talk with Sean, and got the CME equity folks in there. Talk some Bitcoin and crypto options there as well. So spoiler alert, stay tuned for that one as well. Let's go on out to see what the market is trading in terms of single names. The hot individual options you guys are all slinging today. Cost you $1.68 in terms of contracts to get into the top 10 today. That's pretty rich. We've seen it a lot lower than that of late, but today 168,000 contracts to get you all the way to Uber. Number 9, Beamer, $1.95. So we're already crossing the 200K mark at number 8 there with Micron. So that's that's getting up there. Pretty lofty day out there. Number 7, Microsoft, 304,000 contracts. That's a lot for Microsoft as well. So already number 7 went to 300K. There are many days where the top 10 doesn't break into 300K even for number 1. So you know what's going on out there today. Number 6, good old Gilead or whatever the Rock Lobster called it. 310,000 contracts there. Number 5, AMD, 320. Number 4, old friend across the street, Boeing. I'll have to go see what's up over there. What's up for lunch maybe? We'll see. 323,000 contracts there. Number 3, Apple, 419. Number 2, Twitter lighting it up out there today. I'm going to go out on a limb and say probably some earnings are afoot out there. The stock is moving quite a bit, up $6, nearly 18% actually, up to about 39.30 or so out there. So a good little run here for Twitter. Strong numbers, even though strong user numbers, but they missed on earnings. That's enough to send them into the stratosphere. That usually would be enough for number 1 with a bullet. I mean, Twitter topped Apple. How often do you say that? But no. Guess. I dare you listeners, take a guess. What is number 1? Yeah, it's your old friend Tesla. Continues to just move and shake and rock and roll and generate some serious options paper. Right now, Tesla's up another 22 handles, 757, up about 3%. This has got to be, what did Mark call him in the past? A squeezy McSqueezerstein. This has all the hallmarks of some serious squeezage going on out there. But it's enough for 776,000 contracts going up out there today on the options side. That's, shall we say, robust. If you're wondering, what does that consist of? What are the hot positions out there in Tesla? Now, let's break them down really quick. The top 5 hot options positions, the big size open positions in Tesla right now. Number 5, we've got all the way out to Jan of next year. Jan 380 puts, about 22,000 open there. So some downside, some fairly reasonable downside, all things considered. It's been through 380 not that long ago. About a month and change, maybe 2 months ago, shy of 380. Let's see. Then we got number 4, 22,000 as well of the Feb 75 puts. So getting a little bit nearer term, a little bit, shall we say, more outlandish when it comes to their downside specking. Number 3, also 22,000 of the June 50 puts. And then we go number 2, 24,300 of the June 250 puts. And then number 1 with a bullet today, and pretty much has been for a while, the Feb par puts. We used to say it was Jan par puts. Now it's Feb par puts that have taken over the reins as the number 1 hot Tesla option position. Those are the mystery puts. Those are the catastrophe puts. Call them what you will. Nearly 70,000 open out there. And in February, too, that's a change. You used to see, we'd see them in Jan, and they kind of roll them out to the next Jan because most of these guys are CDS traders and others just want to hedge that stuff a little bit longer term. But doing it in Feb means they're keeping the party alive. It'll be interesting to see if they keep it on going maybe to March, in which case that's interesting in and of itself. Speaking of interesting, the numbers are out for January. Also pretty interesting. Spoiler alert, it was the most active January on record when it comes to options volume. So I guess the end of a trade war, the lingering rumors of impeachment, and of course the threat of a pandemic. All 3 of those things. Oh, and of course the assassination of an Iranian general, threats of war in the Middle East, all of that contributing to a fairly robust month from an overall options perspective. Total was 521.7 million contracts. Man, that's everything OCC cleared. So there's some other stuff in there that isn't options, but overall, their highest January ever. That's up 23.5% from January 2019. Last year was kind of a slow start to the year. This year, off with a bang, almost quite literally in the case of the Middle East there. So a lot to unpack there. The 3rd highest overall volume month in options history as well. So the highest January and the 3rd highest month. Actually, kind of them, they break down the highest month. October 2018. As you recall, listen, that's the time when the worm really turned for the first time on that bull run we saw after the Febocalypse. October was pretty rough. And then August of 2011, of course, we know what happened there as well. So it was 567,000 million contracts for number 1. In October 2018, 554 million contracts for August 2011 for number 2, and then 521 million for January of this year. Let's break it down into options a little more to our neck of the woods. Let's see. That cleared contract volumes up 23.8%. Equity options, there we go. A volume reached a total of 471.7 million contracts. That was up 0.7% from January last year. That number includes cleared ETF options of about 179 million. That's up 13%. I mean, if you've been listening for a while, you know those numbers have been down. ETFs, indexes have all been down. They were up this past January. And let's see. Yes, that's up to 13.3%, up to about 157, almost 158 million. That was what they cleared last year. Index options were 43.5 million contracts, up 6% from January last year. So any number in the positive category is strong when it comes to indices. And futures, which is mostly VIX futures, was about 6.5 million contracts. That's a 2% increase. That's another one that's kind of been in the doldrums forever now, coming off month after month. So robust month pretty much across the board, which is kind of interesting. Also driven by earnings. We had some earnings out here this week. Google, a.k.a. Alphabet, on Monday. Disney, Sony, Allstate, Ford on Tuesday, Wednesday, Merck, Siemens, GM, and Spotify today. T-Mobile, Uber, Activision, Blizzard, Fiat Chrysler, Twitter. We just talked about them. Oh, yeah, WWE's reporting. They've had apparently some shakeups out there as well. And not to be outdone, we've got SIBO before the bell tomorrow. All right, let's keep on rolling now into some other fun stuff. It is time to get weird, time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's get weird. Let's put on our weird pants here for some odd blockery. Let's kick things off. And John, have to tell him he's already got his weird pants on, if he has pants on at all. Let's see. Let's first kick it off. Our first Eye of Sauron name/victim today, listeners, is an obscure one, which is always fun. It is Hecla Mining Company, ticker symbol HL. This is a silver and other precious metals miner out of Idaho. And they were founded in 1891, for a little bit of historical trivia. Ticker symbol HL, trading today a whopping $3.40. So if you like the cheapies, we got you covered here to kick things off. Some might argue, like the Viceroy would have, that is an option in and of itself, that stock price, but doesn't matter. We got some paper going up today. This name has had an interesting year. As you know, the precious metals has been an interesting year as well. A year ago, they were trading $2.60. So about 80 cents below where they are right now, and then they kind of sold off over the course of the year down to about $1.25 in May. So they took a nice drubbing there in May. They since have rebounded quite a bit, almost 3x that. Their 52-week high was 3.5, so it got down to about 1.25 on the downside and about 3.5 on the upside over the course of the past year, and they're pretty close to that right now. They got down to about 290 again not too long ago, about a couple of days ago actually. They've had a nice little uptick just in the last couple of sessions. So they're back on the upswing again. So that may play out to what our paper found today. Let's see what our Eye of Sauron. Yep, it's calls to the tune of the SEP 3.5 calls going up for 42 cents. This is pretty much exactly mid-market here. There were 35 cents at 42. So someone's splitting the uprights here over there on the NAM, the NASDAQ options market. A couple of big prints going up, 9,000 of them for 42 cents. Followed about a few minutes later by another 5,000 and change, also for 42 cents, or a total of about 14,000 going up here on the day. This is all clearly opening. This is interesting, given the fact that the stock has just kind of shot up to where it is. It has the whiff of maybe someone probably buying this thing, saying, "Hey, we got some upside to go." Or, of course, you can look at it the other way and say they're going out to September, getting a little bit of premium, and they're kind of splitting that upright, so they could be trying to harvest a little bit and say, hey, if it gets up to $3.50, I don't mind dumping it at effectively $3.92, which is pretty much decently north of the 52-week high at that level. So, Mr. Rocklops, this one's kind of open to interpretation. Are you feeling that they're maybe swinging for the fences with a little bit of upside love, or do you think they're trying to harvest a bit of the old risk premium, sir?
This is an interesting one, I have to say, on that score. Do you really sell a call It's like right in the middle. Do you really sell a call on the $3.50 stock? I guess
that's a whole other debate we could have about trading options on this thing.
And the Viceroy is, he's spinning. He's like, his ears are burning, and he doesn't know what to do with this type of trade right now. My sense is they're buying these calls. Gold miners, whatever. Is it a silver miner? I can't remember which one Hecla was, but or hey, you'll take your 10% yield and be happy, right? So I would guess it's a purchase, but as you know, we've been wrong before. But that would be my guess on this one.
I lean purchase as well, just because I'm a sane person and writing calls on a $3.50 stock. You're right; does seem like that way lies madness. But hey, it is. He's getting out at a fairly decent level if he's sitting on a ton of this stuff. So yeah, there are crazier things. So what we're going to put that in our to be watched category. We're going to come back sometime between now and September and see how our friend has fared and what the heck maybe he was actually up to. We shall see. As we keep on rolling into our next name, what do you guys think? Think this guy's buying calls? Think this guy's selling calls? Or a gal? We don't know. Hit us up. Let us know what you think. Moving on to the next one, Dropbox. Good old Dropbox. Ticker symbol DBX. Trading today about 18.5, so that puts it up about 90 cents or about 5%. So a good little day here for Dropbox over the course of the past year. It hasn't been the best year, though, looks like, for Dropbox. A year ago, it was trading 25.25, so well north of where it is right now. Got up to as high as about 26.5. Looks like that came a couple of times. They touched it, came close to it in February, then they sold off again down to about 21 and change by April. Then they rallied again up to about 26.5 by mid-July, and then they just fell off a cliff. By early August, they were trading 17.25, and they got down. Looks like they got down recently to as low as 16 and change. So they're a wee bit off of their highs they set earlier in the year, so it hasn't been the most robust year here for Dropbox. Not surprising. That's a challenging space, the cloud storage space right now. A lot of competitors, a lot of deep-pocketed competitors out there, Amazon, Google, others, Microsoft, all playing in this space. So it's got to be challenging for a company like Dropbox, even though they are one of the early movers in this space. Let's see what our Eye of Sauron found for us today. Oh, it's like they got some puts to the tune of 5,000 of the April 15 puts for 50 cents. Interesting. Someone lifting offers. They were 45 cents at 50, surprisingly tight for these puts. And someone said, I will take those for 50 cents. I will take them 5,000 times. This went up on the SIBO. Obviously, this is opening as all of our Eye of Sauron paper tends to be. That's one of our first criteria. Got to be opening. Let's see here. Earnings are coming up. They are this month. They are February, so it looks like a little bit of an earnings play maybe baked in here as well. Maybe some earnings consternation. Someone maybe holding a bunch of Dropbox stock and a little bit worried that we're going to retest those lows, even though the 52-week low is 16.08. So this guy is hedging way below it. He stopped himself out at 14.5, and he's doing it by April, which is kind of interesting. Maybe someone is a little bit concerned that we're going to see a pretty cataclysmic earnings number. Looking at this chart, this wouldn't be the first time that Dropbox has fallen off a cliff around earnings. It fell off nearly 10 handles back in July, August timeframe. So if it repeats something like that, 14.5 won't look too crazy. Right now, that seems like a pretty dire bet, and also a fair amount of premium to pay for that privilege. Mr. Rocklops, what do you think about somebody stopping themselves out effectively at 14.5 here in Dropbox, sir?
Do you find this a useful put right now in Dropbox?
I'm not overly enthused by it, no.
I could see, because Dropbox has had, they are in a crazy competitive space, cloud and all that. Who knows? Who knows what's going on with Dropbox? And I could see somebody protecting, but certainly, that's definitely kind of a bottom of the range type of put purchase. So I almost think that it's better as a line in the sand put for the dollars that they're bringing in, around 50 cents. But I don't think it makes a great, opening put purchase. I mean, you got it. Dropbox, unless they think their earnings are just going to be totally disastrous, which is possible. It's had some pretty big earnings breaks before. So That's what that one feels like to me.
Yeah, that's the only real sensible read of that, is that someone is just spooked out of their mind about a terrible earnings announcement. Because otherwise, you're right. I'd much rather be on the other side of this, selling this to this guy. There's a lot you could do between 18.5 and 14.5 here and on the way down. But yeah, this one I'm gonna put it in the to be watched category. But yeah, not my favorite of uses of capital here. We've seen weirder, we've seen worse, definitely. But yeah, not my favorite by a long shot. And if you're worried about Feb, maybe you go a little closer to home. You save yourself a little bit of that premium. There's a lot of things that we could do with this one. We could spend a lot of time doing that. Instead, let's keep on rolling. Let's get to our final one here. This is the Stars Group, Inc. Ticker symbol TSG. This is a Canadian gaming and online gambling company. Let's see. TSG is a ticker. Trading right now $23.37, down about 75 cents or about 3%. Looks like it's been a decent year for this name. I do believe this is a newcomer to the Odd Block, so that's kind of fun. Always nice to have new names joining us here on the show outside of the old Teslas and everything else. Let's see. A year ago, they were trading $17.05, so they're a wee bit north of that right now. And they had they kind of languished in that range for a while. Actually sold off a bit down to about 12.5 down in August. So they had some rough middle part of the year. And then it kind of turned around pretty abruptly there in September. They were trading about 14 and change. And they gapped up to about 21 or close to 21, 20, yeah, almost 21 so late September, early October, they gapped up about 6 handles or so. So it looks like a nice report there. And ever since then, they've kind of been on the long, slow, steady upswing, topping out at about almost 27 back in January, actually, it's like about early January before kind of drifting off a little bit right now, back down to where they are, 23.37, giving up another 75 cents today. So not the best day for them. So they're kind of towards the upper portion of their range, even though they've given up some of that over the past month or so. Let's see what our Eye of Sauron found for us out here today. Oh, looks like someone deciding the worst, or I should say the best, is not over for TSG. Coming in pretty long term, going out to Jan of 2021, to Jan 22 halves. So in the money calls, also an interesting choice. Going up 4,800 times for $3.30. This is opening, and this was through the offer. They were offered at $3.20. So this guy paid a dime through the offer to get his 4,800 done. This was opening, obviously, over there on the Amex. There are going to be earnings, obviously, between now and next January. The next earnings announcement, February 27th. So you're getting a few cycles baked in there. This guy is loving himself some in-the-money calls. We talked about these before. It's an interesting selection. We don't see that too often. There's a couple of use cases for it. You're super bullish. You really love it. Maybe you're doing yourself a little bit of stock substitution, in which case I might like to go a little bit more in the money. I like a little bit higher delta on that. But hey, that's me. I'm a crazy person. But I don't know about pretty much close to at the money for stock substitution. That's a good question. Maybe we'll see with the Rock Lobster if he agrees with that. Mr. Rock Lobster, what are your thoughts here on this one? Looks like it has the whiff of maybe some stock substitution, but in which case they're choosing interesting strikes, or maybe they just really love themselves some TSG. Either way, they're coming to play for a long time here in the Stars Group, sir.
Yes, I would say they are. It does feel like stock substitution, feels longish, and this, I don't know what this, I can't even find any fundamentals on it. So, but clearly they know what the stock does. It does feel like a little stock substitution. And I mean, you basically get the same delta for a tenth the cost. So it's not I would say it's not a terrible trade. It's pretty decent use of money.
It's not bad. It's about a 62 delta. I was thinking it was a little bit low. I thought it was maybe mid to high 50s. I don't know. Where's your delta range for stock substitution, Mr. Rock Lobster? I
don't know. I'm okay with like 60 or 70. That's fine. Because you could usually buy more, So if you sell, let's say, 1,000 shares of stock, you can buy 14 calls. So, you're kind of trying to keep it, but if the stock does take off, you do have 4 more deltas, and it increases so I try to add a little more leverage if I roll out of a stock and just buy calls. That's the gig.
I usually like to lean closer to 70, but this one's 62. It falls within, it's got to be at least 60. If you're not playing 60, then you're not doing it right. but otherwise you're not really getting stock, right? You're getting some other thing. So interesting stuff. This is a long time out. I'll tell you what, we'll be charitable. We'll put this in the long-term to-be-watched category. We'll probably have a better sense earlier than later on this one because it is effectively going to be stock at this point. Meanwhile, though, it's that other point in the show. It's time for you guys to take the reins. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. Time for the mail block. Time for you guys to join us. Your questions, your comments, your insights. Got a lot of you chiming in. First off, we got Chinook. I like that handle. Chinook asking, I've been wanting to ask this for a while. Well, get it off your chest here, Chinook. He said, I've been wanting to ask this for a while. What do you mean when saying Tesla par puts? What level does par indicate? Does it mean current value? Well, that's me. That's the old school. You can take the boy out of the pit. Sometimes you can't take the pit out of the boy at the end of the day. Sometimes the old school market maker speak slips out. Par typically refers to the 100 level, which is why I usually use it around Tesla, the Tesla par puts, because that's where the OI usually aggregates. In fact, we saw Feb par puts are pretty active, now Feb 75s. Par can also be used kind of interchangeably for pretty much every 100 level, so a 500 put, some people could call that par as well. But the most common use case for what we refer to as par is the 100 strike or the 100 price level, which is why Tesla lines up so nice with it, and which is why we use it all the time. Is that your use case as well, Mr. Rock Lobster, primarily around 100?
Yes. 100 is usually par. I don't think 1,000 is par because it's Tesla. Now we have...
Yeah, now we got to talk. We have a new par for Tesla now. 100 is so antiquated now. But there you go.
It's so last month. So last month.
Well, there you go, Chinook. I'm glad you finally got that off your chest. Yeah, sometimes the old vernacular slips out. You can't help myself, and that's what I mean when I'm saying park. All right, John K. He's got a good question here. Interesting one. I think we touched on it in the past, but it's been a little while. It might be worth revisiting. This comes from John K. He wants to know, what made you get into options? Well, let's start with Uncle Mike first. Let's get the Uncle Mike origin story. Uncle Mike, sir, what was it that lured you to the dark side of options?
Oh boy, this is actually kind of interesting. So I remember shortly after my first year playing arena football, I really came into kind of like a early 20s crisis in that whenever I had been in college, I figured, okay, I'm either going to make it in the NFL or I'm not going to make it. There's not going to be an in-between. I didn't even think there'd be an in-between, but there's an in-between, meaning that I made it and then I was cut and then I was kind of a pro football vagabond. And so at that stage, I was kind of freaking out in that I'm like, well, I don't know if I'm going to play in the NFL again. And then the thought of working an office job really doesn't intrigue me that much at all, even though I majored in business. I mean, I had my college degree, but then I really kind of had a little... And someone gave me some Get Rich Quick CD on options. That it was like basically one of the traditional, come to our seminar and then pay $3,000 and we'll teach you how to make a living trading options. And so I listened to it. I never paid any money for it, thank God, because the guy who was a buy, I think, ended up going to jail. But I became so fascinated by how the option product worked that I just couldn't stop teaching myself about it. And I eventually, after a while, just went to good sources of information like the CBOE, exchanges, things like that. And so I remember there was even one day I was living in this dumpy little apartment. I had a day off from whatever random job I was doing at the time. And so like, all right, I'm just going to spend the time today learning about options. So let's start off. It's like 7:30 in the morning. I looked up, it's 10:30 at night, and I did not even eat all day because I was that fascinated about everything that I was reading and learning about. And so that's kind of what got me into it. And it's been a lifelong fascination for, almost 20 years now. So that's the origins of how I got into this.
We need little comic books with everyone's origin story. Mr. Rock Lobster, let me think. You were sitting on the shores of Maine, eating a nice fresh lobster that had just jumped into your boat. And you decided, you know what? I want to go to Chicago and trade them their options. Is that how it worked?
No, it did not work like that. Maine only happened when I became kind of like an old semi-retired option trader.
A recluse, a hermit.
Yes, reclusy hermit type. No, I was in my 5th year of college, and my parents told me to get a job, and I was going to school in Santa Cruz. I was Banana Slug, and you could at that time you could get a floor job with the Pacific Exchange really easily as a quote operator, and it paid, I think, $1,200 a month back then, 30 something years ago, and you could actually live in San Francisco for that amount. That was before the .com boom. So I walked down to the floor. I'm like, wow, this is cool. I want to work here. And that was it. And that was, it's the last job I pretty much created a resume for, to be honest. So, and I didn't even have any experience because, I was just I just got out of college, and I got a job as a floor trader. And I got a job as a quote operator hired by Group 1 about 3 months later to run sheets. Then I started as a clerk. Then I became the floor manager, and probably a year and a half after I walked on the floor, I was on a seat, started trading, and that was it.
Yes, the mighty origin story of the Rock Lobster. I think I've mentioned what lured me to the dark side, quite literally in my case. It was back, if you recall, listeners, back in the mid-'90s, there was the Baring scandal, which, of course, took out an old British investment bank. There was the quote-unquote headlines of the rogue derivatives trader out there. Nick Leeson was blasting away at S&P puts and straddles and everything else, and lots of improper usage of the dreaded D word, derivatives. At the time I was in college, I had realized I didn't want to chemical engineering. Spending my life in a soap plant in Iowa didn't really enthuse me, and I was looking for what the next iteration of my major was going to be after I got out of chemical engineering. And that kind of landed, and I saw everyone was just terrified of these things, these derivatives things. They're terrifying everyone. If I could figure out what the hell these things are, it might be useful when I show up for an interview, let's say. I was getting into my junior and senior years. You start doing your internships and all the other fun stuff, and it seemed like it was a useful bit of knowledge to have. So I started researching these things. I ended up, fortunately enough, taking a course in there at the Johnson School there at Cornell, and that was what lured me to the dark side. Once I learned that you could literally take an option and recreate pretty much any other contract you wanted, it eliminated my interest in anything else, stock or anything. I was like, I want to do this. And so I was the one guy of our graduating class. Everyone went to New York out of finance, to go be an iBanker or other stuff like that, analyst. I was the one idiot who showed up in New York in the late 90s saying, I want to trade these options things. And everyone looked at me like I was a crazy person, because even back then, there wasn't a lot of options trading in New York. There was like some NYMEX heating oil and a few other things going on out there. And of course, the euro was coming, so currency desks were being slashed from about 50 guys down to about 3. So when I showed up to interview, it wasn't really a good scene. And I started looking at all the various big desks and their rotation programs, Goldman and others, Morgan, and I was looking at all of those, and they didn't really excite me. I didn't want to spend 3 years doing 1 year doing this, another year doing that, and then eventually after 3 to 5 years, they may trust me enough to touch some capital. And as fortune would have it, a market-making firm found me somehow through a Cornell career site, I think, and flew out to New York, met with me, flew me out to Chicago, and interviewed me in the heart of the SPX pit. That's something you couldn't even really do anymore today. And I walked out there. I was being interviewed in the SPX pit, and I thought, I could do this. I could stand here and do this. I don't have to go to spend 3 years on a desk here in New York and then do that and do that. I could come here and do this right now. Done. I'm in. Where do I sign? And so that was it. That's what lured me to the dark side. And it's been all dark side pretty much ever since. And here I am on the content side of these derivatives things all these years later. But it was that kind of just the terror that was associated around derivatives and just wanting to learn more about them. That kind of really is what lured me. So I guess there were some positive outcomes from that whole Nick Leeson fiasco out there at the end of the day, which is a good thing. We got time for one more. Let's go to Recipe 3Z. Recipe 3Z wants to know, why doesn't anyone become a market maker in options anymore? I believe Andrew even said they trained a student to become a market maker, and that is extremely rare now. Why? Well, if you listen to any of our programs, we've had a lot of people on over the course of the past 13 years. I've been doing it for a while. we had a lot of market makers on in that time. We've had people who've owned market making firms like Petterfee and Blair Hull and others come on and talk about how terrible of a business it is for a variety of reasons. The spreads have tightened, so the actual width of what you can take down is the profit was in the spread. That has vanished effectively. A lot of these names we're talking about are trading a few cents wide now. So from a market maker edge perspective, it's pretty much gone. What you have there now is just risk. So when you have just risk like that, you need very deep pockets in order to be able to take that down. And that also is prohibitive to smaller firms and mid-sized firms. Most of those are gone. The amount of capital required to actually do this was just too high. Of course, technology costs as well, also a huge barrier to entry. Also another reason why only massive firms like your Citadels and a few others are really out there left able to do this. And of course, the nature of the game has changed. You used to be able to come in and trade flat, go home, delta neutral. Always have some residual Vega and Theta positions, but you try to mitigate those as well. Now it's a very different game. Now it's effectively prop trading. You're putting on positions and having to do that just to make some sort of income, make some sort of profit at the end of the day, because the day-to-day spreading of cent-wide markets is not going to do it for you. So there's a lot of reasons that have combined to really squeeze this down payment floor to floor. The taxes there, 40, 50 odd cents or more a contract. On top of that is another tax that was being paid by the market makers. So all these have combined to really squeeze out a lot of the small players. That said, Mr. Rock Lobster, you guys did create a market maker not too long ago. So what do you have to say about why that is such a rare occurrence these days, sir?
Well, first off, I don't think there are many option education firms that can do that, to be honest, quite frankly. So I'm going to say none besides us. And that's not even a stretch. It's just, you need that candidate was a certain type of candidate, well capitalized, really smart, had already been trading at a high level. So, I could, already educate him in a way that, he was already there. The aptitude was there. A lot of the guys in our pro room right now at Option Pit, that's sort of how they trade in position. So they're not, it's just a different game when you learn how to trade options like that. It's not, looking for, it's not just looking for what stock's going to go up next or kind of trace some technical signal. You're trading, you're just trying to arb volatility. So it's a different game. But you still care about stocks going up and stocks moving and all that kind of stuff. It's still fun. It's hard to, walk onto a floor and do that anymore. It's just, there's no floors, number one. So first you have to be in a firm. There's a huge technical requirement for the back end. And you have to be really well capitalized. And that was one of the reasons why I left, is we had to actually go raise significant money to try to step our game up and compete. And at that point, we're like, we'll probably be gone anyway in 5 years, which was not too far off. So, in reality it's hard to compete against the, Citadel and like 3 or 4 other firms that basically control it they have a huge capital spend. It's a totally different game. That said, you could still, as a market maker, get good margin, crazy margin, actually. And if you like to trade, it's still a vehicle, but you need substantial money, or you would have to go to a market making firm and try to get that position.
How is your market making? Is he still out there doing it?
Oh yeah, he's doing great.
Well, there you go. There you go, listeners. There is one more out of the legions who have left. One more has returned. So there you go. Recipe 3Z. Why there has been an exodus from the market making business over the last couple of decades. Meanwhile, we have to make an exodus into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Well, outside of the bear virus fears, I do like that. And then, of course, all the other things we talked about. Impeachment now, it seems to be in the rearview mirror. Election coming into focus a little bit. Iowa issues notwithstanding. New Hampshire next up on the docket. And, of course, still are some big names to pop off after the bell today. We mentioned Activision, Blizzard, Uber, Fiat, Chrysler. Tomorrow, SIBO. See how things are going in the vol space. A lot of other things popping off. Well, what are you guys watching? Mr. Uncle Mike, we'll start with you, sir. What is on your radar for the rest of the week into the weekend?
I only have non-farm tomorrow, so I'll be eagerly awaiting that when that comes out at 7:30 Chicago time. And then technical level, seeing if we can make a run at 3,400 on the S&P.
There you go. A run at 3,400 out there in the S&P. Mr. Uncle Mike, or should I? Mr. Uncle Mike. We just talked to him. Mr. Rock Lobster, sir, what is on your radar for the rest of the week into the weekend?
I guess you have a non-farm payroll number. It's mostly how do we get over this coronavirus thing. I think those are dominating. Everything else seems to have been, it looks like we have a winner in Iowa, as far as I can tell. So I guess we just see where all that takes us. And as of right now, I mean, it looks like we're going to close at an all-time high again. And maybe the market's just finally running out of steam a little bit. So we'll see what happens. But I think those are two of the things that are driving headlines right now.
Unfortunately, listeners, that music means we've come to the end of an epic sojourn through the world of options. But if you need more, don't worry. We got more in store for you. We'll be back in pretty much exactly half an hour to talk equities, a lot of equity vol and all that kind of fun stuff too. Crypto options kicking off over there at CME. We'll have the head of equities and indeed crypto options on from CME to talk about the launch of those products and how those things are unfolding so far, as well as what else is going on out there. Copper, WTI, all these things moving and shaking. We'll get to all of that on TWIFO in about half an hour, or of course, just hit next on whatever device you listen to this now. It should be ready to go up there for you. But before we go, let's go back around the horn, check in with everybody. Let's start with Uncle Mike. Sir, Uncle Mike, if I go to your website and I click on the glorious Fox, what will happen, sir? I will take it by your resounding silence that nothing will happen, sir. So we'll head back to stcharleswealth.com, listeners, and click the Fox for yourself. Maybe one of these days, listeners, it will do something. I'm going to it right now. I'm going to click it right now just to make it. There you go. I clicked it. Nothing happened. But one day, join our newsletter, it says. So there you go. He has added something. stcharleswealth.com. Sign up for Uncle Mike's newsletter. Get all that good stuff. And speaking of newsletters, Mr. Rock Lobster, I heard you got one. And you also got a cool club. What's cooking in the land of the pit, sir?
Yes, Vol Trading Club, still at Option Pit. Come on over, check it out. You want to learn how to trade vol? Come on over. We also have Edge Hunter sheets. We have all kinds of stuff. I'm starting to post some stuff to Twitter, by the way, every once in a while. Just, hey, look at this. This is kind of a cool thing. And that's it. Come on over to optionpit.com and order our stuff.
There you go. Optionpit.com and order their stuff. Maybe you too can become a market maker if you are so inclined. And on behalf of Uncle Mike and the Rock Lobster and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, all the cool stuff that you do. Keep it coming. Keep those questions coming. I love your out of left field questions sometimes. They're fun. Keep those coming. And we'll see you back here later today for TWIFO. And then we'll see you back here tomorrow, 1 p.m. Central, 2 p.m. Eastern, for a little volatility views. And we kick it all off again next week on Monday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.